Hello, today is Wednesday, 22nd of August, and welcome to our latest market alert. Today I want to just direct you on the XTB website here. If you go to the market news section, you can see an article I posted yesterday talking about how today could be a momentous day. If we look at the S&P 500, so that's the US 500, if you trade on XStation with us, it could be set to record the longest ever bull market. So today, barring a highly unlikely 20% decline, the market will have gone 3,453 days without a 20% drop, which is the common definition of a bull market. Now this will surpass the previous record, which ran from here, October 1990, to the peak in 2000, which is here, as you can see, 3,452 days. If we click it, you can see a little bit more closely this chart that I took from Bloomberg. However, there is a bit of a rounding error that needs to be considered here. This decline in October of 1990 was actually 19.92%, so whilst it's commonly remembered as a 20% drop, we didn't actually get that 20% decline. So some people say the longest technically is from 1987 to that peak in 2000, which is 4,494 days. But either way, you can see it's a very long bull market that we've had, and you can see from this low in March 2009, when the current one began, we've had a very strong clean move higher, which is quite in contrast really to the sort of parabolic advance we had into the late 90s. Now if we look a little bit more closely at the recent charts, if we switch to XStation here and we start off the US 500, you can see we got some interesting price action yesterday. So the market also moved close to its all-time high, which is 28.78, but we got this inverted hammer here where we had quite a strong rejection, a bit of selling into the US close at 9 o'clock. Then we also had that news out from Trump's lawyer Cohen, which possibly implicates the president in his legal case, and we saw this inverted hammer. So important area to keep an eye on is these highs around 28.73 yesterday to 28.78. Whilst we remain below there, then we could be set for a pullback with support potentially found in this region for around 27.90 to 8.05, which was previously resistance. You can see after we had a break above, has acted as support on a couple of occasions. Turning to US 100, you can see we got similar price action yesterday with this inverted hammer, but we weren't quite as close to their previous all-time highs. Now this market's been in quite a clean uptrend for much of this year. You can see a series of higher lows I've drawn on with this trend line, and also we've had higher highs at the top. If we do break below this rising trend line, then we could get some downside with this 23.6% fib taken from this low here back at the start of the year to the all-time high just last month. You can see if we do break below here, the 23.6 is a potentially interesting swing level to keep an eye on from these previous highs. And also if we do go below there, the 38.2 around 7,000 level, which again previously acted resistance before being broken and providing support. In terms of resistance overhead, if this trend line does hold, then look to 7,530 as a potential area of interest and see how the market reacts if we do get up there. The US 30, which is the third major US index that we offer, is slightly different in terms of its market structure. You can see we made the all-time high earlier this year, back in January, but really it's been a range trade since then from this February peak here up until yesterday, where it looked like we were potentially breaking higher, but this market is lagging behind a little bit, the US 500 and the US 100. Again, we got this strong selling yesterday and we closed right back on the lows, which is indicative of fairly strong selling pressure. And if we do remain below here, then we could get a pullback into this 25,180 region. Longs would like to see a close back above 25,810 to kind of negate this candle, and if we do close above there or take out the intraday high, then could look for a push up towards those all-time highs around 26,680. Turning our attention to FX, we've had some strong moves higher in the euro US dollar so far this week. Yesterday we got a strong move to the upside after the US dollar came under pressure following some Trump comments on Fed policy, saying that he basically wasn't thrilled with their hikes that they've been pursuing. So you can see the market has now recaptured this area around 115.40, and we closed above it yesterday, which was previously important support. And after we break down below there, the market flushed down to this 113 low. Now we're back up above 115.40. The outlook's a little bit more positive for this market. And in terms of levels look to above, we could say 116.30, possible resistance taken from these swing levels, and also this falling trend line here. Before we get too big a move to the upside, you'd have to see the market move back above this 118.50 and regain that, and then could possibly push back up towards the 120 region. Finally, gold. We've also seen this recovering on the back of this US dollar weakness. We're back around the 1200 level here, and we're close to retesting where it broke lower from just a couple of weeks ago at 1205. See, the market has been in quite a strong downtrend in recent months, but we are pulling back into these exponential moving averages. I've got the 8 here in blue and the 21 in yellow. If we do pull up to 1205, you see that broadly coincides with where the 21 EMA is. It's not really until we get above there and we start to see these EMAs possibly turn positive that we could hope for any more further upside ahead. And the low of 1160 was actually the lowest level in over a year that we saw here going back to early 2017. And this is an area, if we do turn back lower again, to possibly keep an eye on for support. Now, in terms of events this week, the economic calendar is fairly light. We have FOMC minutes, which could obviously impact all these US assets tonight, which is Wednesday at 7 o'clock. However, seeing as the last Fed rate decision was unchanged, there wasn't really any big developments from it. This potentially won't be that big of an event. The Jackson Hole speech from Powell on Friday, however, could be, especially in light of those comments from Trump on Fed policy and the emerging market crisis we've seen lately, and how that could reflect in future Fed policy going forward. Okay, so thanks for listening and best of luck if you're trading these markets this week.